One question in every insurance business mind is, what is next for InsurTechs? So how will they fill the gaps in the ecosystem, right from the distribution to supporting customer services to customize niche products? Can InsurTech be as big as the traditional companies? Amol Data Editor ETBFSI is connecting with us online to have a deeper conversation with Thomas Hulab, the founder and CEO CoverGo, an insurance tech company from Hong Kong.
Hello and welcome to ETBFSI Converge. And on the second day, which is specifically dedicated to insurance sector, I'm going to talk about InsurTech. And I have with me Thomas Holub, the founder and CEO of an InsurTech company, CoverGo, from Hong Kong. Thomas, welcome on the show.
Thank you very much. I'm all excited to be with you here.
Great, Thomas. Even we are excited because InsurTech is a very, very interesting area. It's a new area. Though we have, small companies in India, but we would like you to tell us more about how the CoverGo is operating in Hong Kong. When did you start this company? How's the market that you are seeing right now? And more importantly, how the people, specifically the customers, are receiving you.
Okay, sure. Lots of questions. So let me introduce CoverGo first. We are an insurance technology company. We started in 2016, so it's our fourth year now, and we have grown a lot, over the last few years, especially in the last year. As you can imagine, with everything that is happening, and with COVID-19, it really accelerated, our growth, and also the whole, digitization in the insurance space. But to introduce more about CoverGo, so we are the first fully configurable modular no-code insurance platform to digitize and automate all insurance processes. So we work with insurance companies, both on the general insurance side and also life insurance side, and even some bank insurance and MGAs. Although we are based in Hong Kong, but we actually have clients across Southeast Asia and even in the US and Canada. So we are international company targeting markets in globally. And yeah, how we have been received in Hong Kong. Just judging, on our growth, I think we have been doing very well. Of course, we started in Hong Kong, so we have got the initial traction here. As you can imagine, insurance is very traditional, and I would say even more so for markets such as Hong Kong, because it's such a mature and developed market here. It's Hong Kong is 60 billion, in premium per year, USD in premium. So it's one of the largest markets in Asia. So yeah, there are a lot of challenges, to start a company and actually start collaborations with insurance companies. But we go there now. We work with a number of insurers in Hong Kong and in other markets as well. We have also managed to attract senior people to our team from the insurance industry. Now we have large clients, and we also actually managed to get some support, from the Hong Kong government, from the Singapore Monetary Authority of Singapore, and other, programs and partners. So overall, I'm very happy, but of course there are always challenges, and we try to grow the company, as we can. But yeah, I'm very positive, especially about what the future holds for us. For example, we have just completed our Series A. To raise some funding in this environment is actually quite difficult. As you can imagine, all the investors are very skeptical or very careful. They don't invest much in this uncertain environment. But on the other hand, I think in our space, in what we are doing, it's almost the opposite, right? Because you see now so much potential, and there is so much pressure on insurance companies. So yeah, I think it's actually it helps to accelerate the digitization of insurance industry, which is also good for us.
Okay, thank you, Thomas, for that opening remarks. But I would like you to tell me and my participants more about the business model or the operation model, specifically of the InsurTech companies. How the InsurTech companies are different from the traditional companies. Why I'm asking this question is because me as a customer or anybody who wants to buy a policy, why they should come to you? Come to InsurTech company than the traditional company. Could you decode this?
It's a very good question, because actually, it really depends on what kind of InsurTech you are. In our case, actually, we enable insurance companies to become digital insurers. So, so we don't sell insurance ourselves. We are enterprise software, no-code platform to help insurance companies to distribute products, right? So we provide omnichannel distribution solution and also policy administration, claims, core system. So, but of course, I mean, we come across this all the time because even more than, insurance companies, because we have multiple clients, right? So they always come to us and they ask us, yeah, how can we be different? Why will customers, buy from us if we are digital? I can definitely, provide some good reasons why, for example, customers turn to InsurTech. I will come back again to the current situation. As you can see, like the reason why suddenly people buying more and more online is it's very obvious. Agent distribution is or broker distribution is now gone. It's very difficult. I'm not sure how it's in India, but in most markets, agents, brokers can't really meet with their clients. So everything has to be done remotely, virtually. So this helps first, the direct distribution. So customers just going online, no paperwork, no manual processes, no waiting time, great customer experience, great conversion. So all these things, make it very obvious choice to customers. Customers are already used to buying things online, right? So you have all the e-commerce sites, and I know in India you have a massive e-commerce market as well. So insurance is just, the next step. It hasn't been really done much, but of course now it's more and more. So yeah, these are the reasons. And even in terms of the broker or agent distribution or bank insurance distribution, of course now it's also becoming more digital. So instead of meeting physically, you can now do virtual conference with your agent, and you can do virtual customer onboarding. So you can still get the personal advice, but everything happens digitally, virtually. So this is how I believe the financial advisors can survive. And yeah, so I mean there are lots of good reasons. Yeah.
Thomas, when I look at the CoverGo website, you say that the insurance for tomorrow.
Yeah.
I believe that the people are buying insurance for today. So do they ask the question that why should I buy for tomorrow? I should buy it for today.
Yeah, so I mean, for us, we always look ahead. So we believe, how insurance is built, distributed. Today it's not good. So that's why we want to make sure that we are always ahead. But yeah, you are right. Of course, we are helping companies, today, now, to become the digital insurers, right? And we say of tomorrow because we believe, this is how they can also grow their business and have sustainable business. Yeah.
You partly mentioned some time back that the other countries where you want to go and maybe explore different geographies. I do understand obviously the importance of insurance and also the digital revolution which is taking place all over the world. In fact, there are a couple of players like Lemonade, which is raising the flag high of insurtech companies. But still, if you could elaborate more on the opportunities that the insurtech companies can get in this current market. During the pandemic, yes, digital is is the aggressively used term, and every company is going for it. What is the big benefit that the insurtech companies can have?
I will actually try to cover both sides. So you mentioned Lemonade. So Lemonade is a digital insurer. So they distribute products. They compete with all the existing players. So for them, yeah, of course, the current situation also brings lots of opportunities. They just completely streamline the whole customer journey. So it's it comes from like the first like the customer onboarding, through policy changes to claims, claims experience. So they are able to completely automate and really, make the experience great. So it's for customers, it's very nice, something that they are used to, from other industries as well. Of course, they also use lots of other tools such as, AI, like some analytics, for customer profiling, for like right pricing and distribution at the right time. So there are lots of ways how you can optimize distribution, how you can actually succeed, and how you can take business from the existing players. It's also about bundling products with other products. It's about integration with affinity partners, distributing products at the right time. So this means you can really have for example, when you, I don't know, when you take a taxi, right? So you can just get coverage, almost without doing anything, just one click, and you can get covered during the journey. So all these usage-based products, for example, micro insurances. So there's lots of innovation on the product side, distribution side, that can really help, to grow the InsurTech side of the business. And in our case, so we are enterprise, software. So we actually provide these solutions to insurers, and our business is different. So basically, we are subscription software. So our business also grows, in this environment, because companies now need more these solutions more and more.
So, Thomas, could you also, like you mentioned about micro production, that is the one focus area which the InsurTech companies have, and that is where, in fact, the InsurTech companies can, create a major difference compared to traditional companies. Can you just name a few customized products that you developed, or few micro products that you developed?
Okay, sure. I think this is a huge benefit of InsurTech, because as you imagine, insurance companies, they have their fixed or set of insurance products, and they are normally slow to innovate. They don't have the right technical capability to launch products within days, for example. With InsurTech, you can have custom products for different groups of people, for different risks, and really you can have thousands of products actually, if you have the right system in place that is able to do it. So in our case, for example, we have set up some usage-based products for example, storage insurance. So we work with some one insurer that that has partnership with storage companies. And this is for Hong Kong. So Hong Kong, it's a very small place, and people don't have enough space in their home, right? So the storage industry is huge in Hong Kong. So when people, need to store their stuff, they just go to these storage companies, and they can get coverage. Once they sign up for 1 month, they can just add on insurance. Just buy. It's like add-on insurance based on the duration. So I think the minimum is 1 week. Then they have 1 month. So yeah, it's add-on micro insurance. We also did another micro insurance, personal accident. For example, when you do different activities, some sport activities, you can just be covered for 1 hour. Then we also have one client in Indonesia. So in Indonesia, of course, the policies are also very small. Small duration. So we also did micro insurance, also personal accident in Indonesia. But yeah, there are many good examples. We have been also working for drivers, like sharing economy drivers, for example, drivers of vans, that you can basically help you move things around. So we have been also working on the insurance for these drivers, so that they are covered during the journey. So yeah, these are just some examples of products that we have been involved in.
How sustainable, when you look at the small products or the customized products that you are crafting or underwriting for the insurance business, how sustainable are these products, Thomas? Because generally insurance companies look for the more sum assured and the more premium, so that they can earn more money also, or make some more profit. But when you're actually crafting a policy, maybe you started from like $5 or something, how will you make money? How will it make sustainable for you?
Yes, I mean, it's completely different business model. If you are in the micro insurance space, you basically, it's about volumes. If you are in the live, high net worth individual space, you just really go, after the big tickets. So in the micro insurance space, with technology, before there was almost no micro insurance, because it was just so expensive to run a system that would be able to issue millions of policies. But now with technology, basically it's possible. But of course, you need, in most cases, some distribution partner, for example, some huge e-commerce player, or it can be just some online business. For example, I think one of the best examples for microinsurance is actually Zhonggan in China, right? So they work with, for example, I think with Alibaba. So they had hundreds of millions of policies, just through the distribution partner. So for microinsurance, I think this is really key. The case that we have, for example, we work with a telco company in Indonesia, one of the largest telco companies, and actually it's the insurer, they have partnership with the telco company, and we provide a platform to the insurer so that they can insure and issue microinsurance policies to the to the customers of the telco company. So of course they have I think over 100 million customers as well. So then you can achieve good volumes, and it starts becoming sustainable. But also in many cases, actually, it's not even the end game, to issue these microinsurance policies, because often it's also great customer acquisition play. So now if you get 100 million customers, buying some very low, micro insurance, you can then cross-sell them, right? So this is it's also, I think, yeah, very interesting about the micro insurance products.
But again, if you could add more into in terms of the profitability, can you
Yeah,
make profits over there? Because if I look at even the smallest of products, specifically, I'm not talking about the term insurance, but
yeah,
even of the smallest of products in India,
yeah,
where insurance plus the life insurance, I mean, and also some investments are made. That
yeah,
product costs at least 400 to 500 US dollars.
yeah,
Okay, that's the minimum range of the size of the product or the premium in India.
yeah,
Now, when I look at the InsurTech products, they're very, very small, maybe a
yeah,
backpack insurance, maybe a cycle insurance
yeah,
starting from just a $5. I mean,
yeah.
is it really valuable for you? Because ultimately you are
Mm.
into a business and you have to also make your money, right?
Yes, yeah, it can be profitable. It really, so first, of course, you have to optimize extremely your operations. It has to be fully automated the whole journey. So that you have minimum overhead cost, and then you can start. Basically, then it's about about numbers, about actual science, about calculating the risk, and then if you, of course, you can make 20-30% more, even more, on each policy. And in the end, it's about the numbers. Are you able to issue 1 million policies per month or more? If yes, then you can get some actually good scale. But again, I think the interesting part is, when it comes to cross-selling more products, because it's often difficult to build the whole business just on some really very cheap micro insurance products. Unless you have hundreds of millions of policies,
Right.
then yeah, it can be actually profitable, good business. But otherwise, normally you then need to expand to other products as well.
One more a small question I will take here on this
Yeah.
micro products. Is there a demand? Do you see a substantial demand for this?
I think it varies a lot by market. So for example, in the like developing markets where people are basically looking for microinsurance. Indonesia is a great case. Also, I think India is, or China also. I mean, a huge population, big numbers. And then if you really, of course, the product needs to make sense. People will not buy something that doesn't bring value to them. But for example, the warranty or shipping, shipping insurance, shipping return insurance, I think is a very, very good case, because now hundreds of millions, people buy online, and to get this policy just costs almost nothing, and you can achieve some nice numbers, and it's just about transaction, right? So if you see how many transactions are made on these e-commerce platforms, so yeah, I think there is demand for certain products. Also the usage-based products, for example, for driving and things like this. I think there are some good examples of microinsurance. Of course, not everything. Yeah, it's true that sometimes you see
Right.
microinsurance products that just don't make sense, or make sense, but only for like small amount of people, and then you cannot just get the volumes you need actually to actually make some meaningful business model, from the products. Yeah.
One more question, and a very important one, is about the regulations.
Yeah.
Because for regulators, it's not an easy task to give licenses to the new age companies which specifically operating in a digital format or an innovative format. How is it in Hong Kong? Are the regulators aggressive in terms of insurtech businesses? Is it really easy to obtain the license for the insurtech companies in Hong Kong?
I mean, yes and no. It depends if you compare it, to what market. There is definitely some development. There is more interest in insurtech. There is a new digital insurance licensing scheme as well. So actually now, if you want to apply for insurance license and you want to sell online, you will be actually fast track. They call it fast track, but it's still very slow. I think so far in Hong Kong there have been three licenses issued, as part of the fast track in the last 2 years, I think, like something like this. So, but yeah, it's good that these things are happening. There are more initiatives. There is also like InsurTech Sandbox, and basically the insurance authorities exploring like different use cases, also allowing customers and insurance companies to to distribute even some life products online, like remotely. So this is new. During the COVID time, they allowed some live products to be sold fully online. Before, you always had to meet with agents, you needed sometimes wet signatures and things like this. So there are things happening. Of course, it could always be faster, but yeah, I'm happy that at least something is happening. I mean, in our case, it's actually, we are not regulated. We are not insurance company. We work with insurance companies. So actually we can go to any market, and that's why we are also, we have presence in multiple markets already, because we don't, of course we comply with, data privacy and all these things, but yeah, we don't need any license as such. So it's a huge benefit for us. But otherwise, for insurance companies, yeah, they need to, they need to go through the, through the licensing scheme, and it's quite, of course, it's quite robust. Yeah.
So what is the scope that you see for InsurTech business going ahead, Thomas? Because, fintechs came, they emerged, and, did amazing partnerships with banks. And, now fintechs cannot be separated from banks. And not only that, but fintechs also created their own identity.
Yeah.
InsurTech is still lacking in that. I know that it's a very, very, in fact, a small segment, niche segment, and it's in a nascent stage. But do you see the same scope for InsurTech as well compared to fintechs?
I think you can also consider InsurTech as part of fintech. Yeah, fintech really is very broad. But you are right that, for example, in terms of banking, it's ahead in terms of digitization, in terms of fintech. Insurance is always lagging behind a few years. But how it will look in the next, let's say, 3 to 5 years, I think it's, I mean, if I compare, to the time when we started and now, it's just completely different. I remember 3 years ago, or even 4 years ago, when we talked to insurance companies about, like some online distribution, or basically new, like modular, no-code insurance system, product builder, product configurator, these things, it was, yeah, they were not really very interested, but now it's completely different. I mean, there are so many conferences, lots of content, lots of like interest in general in InsurTech, into digitization, and yeah, and it's accelerating, all the time now. With COVID, it's even faster. So yeah, I think in the next few years, companies that will not digitize, that will not go really through the digital transformation, will be left behind. Of course, some business models are more protected. For example, if you do life insurance, even now it's difficult to do, for example, agent distribution. So even the life insurance companies are now struggling. But let's say policies that are of higher value, normally you don't need as much automation, as much digitization. So there is more time for these companies to catch up. But otherwise, the like retail companies focusing on general insurance products, or like simple life products, yeah, I don't see how they can like survive in the next 5 to 10 years without actually going through the proper digitization. So I think InsurTech, yeah, ultimately, most companies should really become InsurTech companies. Yeah.
Okay, right. And my last question, Thomas, by any chance, if you could give me more sense on the investment front, are VCs, the angel investors, ready to pump in money into the InsurTech startups?
Yes, it definitely slowed down this year, compared to last year, due to COVID. So this is more like overall, but still, I mean, there are still companies, raising money, they are successful, but yeah, I would say now like investors expect more. They have a higher expectation in terms of your traction, in terms of your business model, in terms of your sustainability. So there is just much more like due diligence, going into the process. So I would say the companies that raise money now are really, much better prepared, for the future. And I think there will always be money, and it will probably grow again, because it's only a matter of time, when you can actually, prove that actually your digital insurance business model grows. But it's also true that there have been actually maybe too many InsurTechs in the last 1 or 2 years, and of course some of them don't have proper business model. They don't have they don't basically tick all the boxes to be large InsurTech. So yeah, there has been a slowdown, and I think it's also good for the market just to consolidate a bit. But yeah, I think money in terms of investment, it will always be there. Yeah.
Okay, that was quite interesting, Thomas. Thank you for sharing those insights, and thank you for giving us more literature about the InsurTech business in Hong Kong and also how the InsurTech companies, can take the lead going ahead in future. Thank you so much, Thomas, for sharing your insights. Thank you so much for giving us more literature about the InsurTech business, not only from Hong Kong, but also how it can blossom in many countries like India, China, and Indonesia. Thank you so much for sharing those remarkable insights with us. And I would like to request all the attendees and participants to make comments in the window which is at your left side. And do not forget to like, share, and comment on social media as well. Our hashtag is ETBFSI Converge. Thank you so much for staying with us. Stay tuned and stay connected to ETBFSI Converge.
Thank you for that comprehensive overview. This forum is designed to feature a 360-degree view of the development across the industry. So hope that you have found the finding useful. So do engage with us using the social media, using the hashtag ETBFSI Converge, and we will see you in the next session. Stay with us.